Imagine you're standing right at the edge of a cliff. Seriously, picture it. The drop is sheer, the rocks below look sharp and unforgiving. You can feel the wind kind of pulling at you, and there's no safety net, no harness, nothing. So, do you jump? Of course not. Every single instinct in your body is just screaming, step back, danger, right? You don't need a PhD in physics to figure out what happens next. It's primal, it's obvious, it's just survival. And yet, have you ever stopped to wonder why? Why is it that when we face the financial equivalent of that exact same cliff, so many of us not only walk towards the edge, but seem to eagerly leap right off? This simple, almost comically blunt piece of wisdom comes from Charlie Munger, one of the greatest financial minds of our time. He's not offering some complex algorithm or a secret formula here. He's just stating a fundamental truth about life. We are hardwired to recognize and avoid physical danger. We see a car coming, we step back onto the curb. We see a fire, we don't touch the stove. But what if the most dangerous places in our lives aren't physical at all? What if they're these invisible territories of bad decisions, of flawed logic, and emotional traps that lead to a completely different kind of death? A financial one. The death of your dreams, of your freedom, of your security. So why does this simple survival instinct seem to just completely abandon us when our money is on the line? Why do we chase the financial equivalent of a siren's song, even when we know it leads straight to the rocks? We hear about some guaranteed get-rich-quick scheme, and boom, we're drawn in. A celebrity tweets about a new cryptocurrency, and we pour our life savings into it without a second thought. The market is soaring, and this frantic, primal fear of missing out just grips us, and it compels us to buy at the absolute peak. These are the financial cliffs. They don't look like jagged rocks. They look like opportunity. They look like brilliance. They look like a shortcut, but they all lead to the exact same place, ruin. So why is that place of financial death so alluring? What is this strange, self-destructive impulse that causes millions of people to ignore the most obvious rule of survival? Look, this isn't just a question about money. It's a question about us. To really get this, we need to stop looking for complicated answers and instead embrace a profoundly simple philosophy. So in this explainer, we're going to map out that place of financial death, not so you can try to conquer it, but so you can follow Munger's advice and just never go there. We'll uncover the single most important rule of investing, we'll set up 3 non-negotiable lifelines to keep you safe, build a practical blueprint that basically runs on autopilot, and expose the critical difference between gambling your future and actually investing in it. Okay, let's start by mapping out those cliffs so we can learn how to walk the path safely. Okay, so here it is, the most powerful, most liberating, and probably the most misunderstood secret in all of finance. The path to wealth is not paved with moments of genius. It's not about making one brilliant, life-changing investment. No, it is paved with the systematic, disciplined, and relentless avoidance of catastrophic mistakes. You see, the game isn't won by the smartest player, it's won by the player who stays in the game the longest. Seeking brilliance, that's an act of ego. It's this desire to be the hero, right? The one who outsmarts the market, the one with the secret knowledge. It's a thrilling story, for sure, but it's a deeply dangerous one. Avoiding stupidity, on the other hand, that's an act of wisdom. It requires humility. It requires you to admit that you don't know everything, that you can't predict the future, and that your greatest enemy, well, it isn't the market, it's you. It's your own emotional impulses, your greed, your fear, and your ego. These are those siren songs I was talking about, the financial cliffs disguised as shortcuts. Every single one of them promises brilliance, speed, and an escape from the slow, patient work of building real wealth. And history is just a graveyard of brilliant people who fell for these temptations. I mean, think of Jesse Livermore, the legendary stock trader, the great bear of Wall Street. The guy made and lost several fortunes, all driven by this insatiable need to prove his genius. And he ultimately ended his life in ruin. Or think about the dot-com bubble, where everyday people bet their entire retirements on companies with no products and no profits, totally convinced they were smarter than the old guard. They were all seeking brilliance. What they found was stupidity. They forgot the one rule. See, the allure of these cliffs is rooted in a really deep psychological flaw. We overestimate our own abilities, and we underestimate the role of luck, especially when we're winning. We mistake a lucky guess for a stroke of genius, and that one little error in judgment, that's the first step toward the edge of the cliff. So the crucial point is this, and I want you to really let this sink in. Your entire financial strategy can be built on this one foundation. Stop trying to find the next Amazon. Start trying to avoid the next Enron. Stop searching for the perfect moment to buy. Start building a system that works no matter what the moment is. Winning, in the long run, is simply the product of consistently not losing. It's about building a fortress of sound principles that's so sturdy that the inevitable storms of market volatility, hype cycles, and your own emotional whims just can't knock it down. I know, it's less exciting, it's less glamorous, but it is the only thing that actually works. So if our main goal is to avoid those places of financial death, we need more than just a philosophy. We need clear, unbreakable rules. Think of these as the guardrails on that cliffside path. They aren't there to restrict you, they are there to keep you from plunging into the abyss. Let's build those guardrails right now, with 3 non-negotiable lifelines that will form your foundation. This is the first and most important guardrail. Why? Because you simply cannot profit consistently and safely from something that exists outside your own circle of competence. So when your friend comes to you with a guaranteed tip on some biotech stock, or you see a complex financial product wrapped in jargon that promises the world, or you're handed a contract you can't decipher in 5 minutes, you have to walk away. The unseen consequence of breaking this rule isn't just losing money. It's a loss of agency. It's that corrosive feeling of being a pawn in someone else's game. To invest in something you don't understand is to hand your fate over to luck. And luck, well, luck is a gambler's god, not an investor's partner. Your financial future is your responsibility. Period. This rule is absolute. Never, ever hand over direct control of your money to someone else. Not a friend who claims to be a trading prodigy, not a family member with a great system, and certainly not some anonymous guru you met online. Look, the world is full of charismatic people who are way more interested in managing your money into their pockets than into your future. Now, by managing your own money, I don't mean you have to become a day trader. It just means you are the one who logs in, you are the one who clicks the buttons, you are the one who makes the final decision based on your own understanding and your own system. To give up this responsibility is to invite disaster. It's really not a matter of if, but when. This sounds painfully obvious, I know, but it is a cliff where countless people meet their financial end. Whether it's a bank account, a brokerage account, a piece of property, or any other asset, the legal documents have to have your name on them. Love and trust are beautiful things, but they are not legally binding financial instruments. Placing assets in a partner's name, or a friend's name, or a child's name to simplify things is an act of profound financial risk. Control follows ownership. Simple as that. Without your name on the title, you have no control, no rights, and no recourse. These 3 lifelines, they form an impenetrable triangle of safety. Break one, and the whole structure weakens. But stick to all 3, and you have effectively eliminated the vast majority of ways people self-destruct financially. Philosophy and rules are essential, but they don't mean much without action. Now, what's really interesting is how we can take this entire defensive philosophy, this idea of just avoiding stupidity, and forge it into a proactive, automated, and almost effortless plan for building wealth. This is where we stop talking about what not to do and start building the system that does the right thing for you automatically month after month, year after year. This is the rebellion. It's the choice to embrace a powerful, boring system over the chaotic allure of the market. Okay, let's make this tangible, no more abstractions. We'll use a very common real-world scenario. Imagine this is you. You're building your career, you have a steady income, and you've managed to save a respectable nest egg. The world of finance is just screaming at you from every direction. Buy this stock, try this new crypto, get into real estate. The noise is just deafening, and the pressure to do something brilliant is immense. So, what does our philosophy of avoiding stupidity tell us to do? It tells us to ignore all that noise and build a machine. This is the machine. Look at how simple and elegant it is. This 3-step system removes the single greatest point of failure in any investment plan: you. It removes your daily decisions, your emotions, your fears, and your greed right out of the equation. Step 1 ensures you're always investing, no matter what. Step 2 ensures you are buying a diversified piece of the entire market, not betting on just one company. And Step 3 ensures that your money starts working for you, creating a snowball of growth. You make one decision, the decision to build this machine, and then you just let it run. And this automated approach brings us to the most fundamental choice you will ever make with your money. It's a choice of identity. Are you a gambler or are you an investor? Now, they might look similar from a distance. Both are involved in the markets, both are looking for returns, but psychologically, philosophically, and in their ultimate outcomes, they are inhabitants of different universes. The gambler is drawn to the cliff's edge. The investor builds a guardrail and walks calmly down the path. This just brilliantly illustrates the 2 lives you can choose. The gambler wakes up every morning asking, "What's the market going to do today?" Their mood soars and crashes with every tick of the stock ticker. They're making hundreds of decisions a year. And the laws of probability say they cannot possibly get them all right. One bad decision can wipe out 10 good ones. They are addicted to the thrill, the action, the feeling of being in the game. But they will, with near certainty, lose. The investor, on the other hand, makes one decision: to trust the system. They focus on their savings rate, on consistency, on time. They might check their portfolio once a quarter or maybe even once a year, and they experience peace of mind because their financial future isn't tied to the chaotic whims of the daily news cycle. Their success isn't a matter of luck, it's a matter of time. And this right here is the gambler's fatal flaw. They are obsessed with the past. They analyze yesterday's charts to predict tomorrow's movements. But the past is just that, the past. It gives you no guarantee of the future. Driving this way isn't just absurd, it's guaranteed to end in a crash. The investor gets this. Their focus isn't on the rearview mirror, it's on the fuel in the tank, that's their savings rate, and the long open road ahead, which is time. They know the destination is wealth, and the vehicle is their simple, automated system. They just have to keep driving. So we've established a philosophy of avoiding stupidity, we've set up 3 lifelines, and we've built an automated machine. But why? Why does this boring and effortless system ultimately outperform the frantic, high-stakes game of the gambler? Well, the answer lies in the most powerful and yet most underestimated force in the entire financial universe. It's the secret ingredient that turns your simple, automated machine into an unstoppable engine of wealth creation. This isn't just a clever math trick. It is the key that unlocks the staggering power of compound interest. Let's just look at the example. At a modest 8% annual return, which is historically very achievable with a broad market ETF, your money doubles every 9 years, without you doing anything. Think about what that actually means. The $500K from our case study, it becomes $1 million in 9 years. That $1 million becomes $2 million in the next 9 years, then $4 million, then $8 million. The growth isn't linear, it's exponential. The first 9 years of work were done by your savings. Every single doubling after that is done almost entirely by the growth on your previous growth. That is the magic. It's the reward you get for your patience, for your discipline, for choosing not to leap off the cliff. If you ever doubt the power of time, this single fact should erase it forever. Warren Buffett, arguably the greatest investor in history, didn't become a billionaire through a bunch of brilliant short-term trades. He became a billionaire by finding a good system early in his life and simply letting it run for decades. The vast majority of his immense fortune was not the result of his work from age 20 to 60. It was the result of the compounding that happened on that foundation after he turned 65. His secret weapon wasn't his genius, it was his longevity. He understood that the biggest returns don't come in a year. They come in the 5th and 6th decades of consistent investing. And this is the ultimate truth. Wealth isn't hunted, it is grown. And this brings us to the final, most persistent, and most destructive question that paralyzes so many would-be investors. It's the last trap of the gambler's mindset. Is now a good time to get in? People wait for the perfect moment, for the market to dip, for the economy to be just right. They treat investing like trying to jump onto a moving train, fearing they'll mistime it and get hurt. But this question itself reveals a fundamental misunderstanding of the entire game. It assumes you are smarter than the market. It assumes you can predict the future. It places you right back at the edge of the cliff, trying to be brilliant instead of just avoiding stupidity. This is the only answer that matters. The automated system we design works precisely because it ignores this question. By investing the same amount every single month, you buy more shares when the price is low and fewer shares when the price is high. It automatically takes advantage of volatility without ever requiring you to predict it. Your success is determined not by timing the market, but by time in the market. Every day you wait on the sidelines trying to find the perfect moment is a day you are robbing your future self of the most powerful force you have: time. The ultimate paradigm-shifting insight is this: the effortless path to wealth has nothing to do with being clever and everything to do with starting. The power is not in the decision you make tomorrow, but in the system you build today. Don't wait for the perfect moment. Plant the tree now.